Hello, this is Matt on the Moon Lambo channel. Ever since that liquidation event on October 10th, just 2 months ago, it's become, let's say, very trendy, very popular to be bearish in crypto in general, and even some XRP bulls have flipped. Their bias is now negative. Some of them have even sold all of their XRP and stated that they believe that we're in a bear market or entering one right now. And I think that those analysts are going to regret those particular predictions in terms of us entering a bear market and everything cratering on down. I do not believe that the best for this cycle is behind us. I think there's ever mounting evidence that's exactly wrong. The market's going the other way. Wait till I see what I have to share with you in this video. I have a bunch of XRP specific stuff, but we got to talk about the backbone of all of this, the macro side of things. It is primed, folks. It is absolutely primed. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. As I record this video at 6:41 p.m. Central Time, Thursday, December 11th, 2025, we have XRP at $2.03, so yet another day of sideways price action. Bitcoin at 92,414 bucks. But we did see a little bit of a deviation to the downside. XRP got as low as $1.98 today. That's the 24-hour chart for XRP. And as I flip to Bitcoin, you will notice, I have to go back and forth between the two charts, it's the same damn chart. The market's just moving in tandem. Bitcoin dropped as low as $89,390. And at the moment that happened earlier this morning, if you hopped on X, you may have noticed that suddenly, oh, the bearish tweets are back. What do you know? Price go down and people feel sad. Their fields get hit. Now they type stuff with their little fingers, fat little sausage fingers on the internet. Except for your emotions do not dictate what actually happens in this market. That's the problem right there. And if you look at traditional finance, specifically small cap stocks, the Russell 2000, you know what it did today? That's right, it hit yet another new all-time high. It closed at a new all-time high of 2,590, the highest in history. Why might that be happening? Isn't that kind of interesting? Up 1.21% for the day, which is a big day in traditional finance. I know that's nothing in crypto. That's big in traditional finance. It's not nearly as volatile as crypto. So you might look at those numbers if you're like me and used to crypto and be like, whatever, it's a rounding error. Well, not in traditional finance. And when the Russell 2000 goes, that signals a risk-on appetite, a tremendous risk-on appetite, in fact. And so historically, when the Russell 2000 really starts ramping up, that's when money flows into altcoins. And there have been so many analysts for the last maybe little over a week now. I keep highlighting them, and they're saying, hey, the Russell's breaking out. The Russell's breaking out. And a number of them, when they started saying that, it was when we were hovering around the all-time high. Maybe we would just, barely tapped it within the last week or so. And I highlighted it because I was like, hey guys, I'm just telling you what I'm seeing here. It's like, I'm not a chart guy. I mean, I don't know if you're going to agree or disagree that this is technically breaking out, but this is what's happening here. I just wanted to share it with you. And now more days have passed and we keep hitting more new all-time highs. So maybe it is going to blaze on out of here. I don't pretend to know. I don't, I'm not a chart guy myself. I don't want to be one. But I am very interested in the backbone of all this, the macro, what leads all this, which is certainly global liquidity. And it makes sense given that you've seen that quantitative tightening has ended as of December 1st. We just got the third rate cut. We got news of that just yesterday. Third rate cut this year. Realistically, I think there's going to be more in 2026. You're going to have a new Fed chair close to halfway through the year. There's all sorts of tailwinds, frankly, coming our way. Global liquidity obviously ramping up. This is all good for risk on assets. When the Russell 2000 goes, alts go, including XRP. I just don't believe this market cycle is done, despite what the bears would have you believe. Here's a post from the Market Ear, and so this is one of the writers for Zero Hedge, very popular platform, which I'm sure that many of you have heard of before. And they simply wrote, "Retail refused the Russell, big catch up ahead." And you can see they're highlighting the NDX, which is the NASDAQ 100, RTY, that's the Russell 2000, and then SPX, of course, is the S&P 500. And you can see the NASDAQ and the S&P moved in tandem pretty well. The Russell 2000 hasn't exactly played ball as much. But you know what I always say? Markets find bottoms, my friends. Markets find bottoms. And when there's a deviation like this in the markets, very frequently that does indicate that there's opportunity there. And now we're seeing the Russell 2000 start to pick up. And you know what that means for risk on appetite. You know what that signals. You know what that means for altcoins like XRP. So I'm just telling you, this isn't some slouch here. He's just, guys, look at this. Time to play catch up. Markets find bottoms. It's the same thing I was screaming about XRP specifically throughout 2024. Now, of course, it's not just us crazy internet people that are talking about the Russell 2000 looking rather primed. Here's a video clip from Fox Business. I'm not going to play the thing, but I watched this. It goes on for, I think it was 4.5 minutes, something like that. Yeah, 4 minutes, 32 seconds. But look at the title for this. The title says enough. They got a guy from Goldman Sachs on this clip. That's the guy on the right there. And Greg Tuorto, I guess is his name. I'm not familiar with him, but anyway, so he's on Fox Business, national television. Here's the headline. 2026 outlook for Russell 2000 is a, quote, much higher earnings path, end quote, than S&P 500, says Goldman Sachs director. You have somebody from Goldman Sachs. This is not even a segment about crypto whatsoever. They're talking specifically about the S&P 500, the Russell 2000, the setup for 2026. He goes through a list of reasons as to why the Russell 2000 looks primed. So even though they're not talking about crypto, though, if you understand why this matters, which is what I just keep citing, it's the risk on appetite, stupid. That's what this is. And that's great for us as XRP holders. That is what that signals. So it's not just us crazy internet folk. I'm telling you, this is becoming popular. Even in mainstream media, people are coming around to this. It's just a lot of people don't understand what undergirds all this. But of course, it's global liquidity and the fact that debt refinancing flipped to 5 years instead of the 4 years that we've been used to since 2008. So there's that. But yeah, looking pretty damn good. We had this from chart analyst Zoom. He is one of the 3 chart analysts that I follow who did flip bearish. He publicly stated some time ago that he's 100% out of crypto. He sold it all. He made profit, so kudos to him. I don't believe the same thing as him, but people do not become my enemy just because I'm not convinced of the same thing as them. In fact, I like to share a diverse perspective on this channel, especially when it comes to market. You guys are all intelligent adults. You can decide for yourselves what you think makes sense. But even chart analyst Zoom here seems to be at least recognizing there's a possibility that the Russell 2000 could blaze out of here, even though he sold everything. And so here's his post from the afternoon just yesterday. This is the Russell 2000. Again, small cap stocks here. Russell breaks through and sets a new all-time high after getting rejected by that zone 5x, 5 times. For me to turn bullish, I want to see it maintain this strength and turn the previous resistance into support. Okay, so again, that was yesterday, and we got yet another new all-time high today. So again, one of the 3 analysts that I regularly follow flipped bearish, and even he's saying, okay, well, you know, it looks like there could be a path forward here. So he hasn't flipped bullish, but even he's like, okay, well, let's see. Here's what it would take, and we're kind of knocking on the door of that particular scenario, aren't we? We're above it right now. So we'll see if this is the actual breakout. I'm not in the game of predicting such things. I admit I don't know. But look at where we are the second. It's pretty exciting, right? Because again, you know what this means if you're a crypto holder. Risk on, baby. Risk on. Here's a post from Cryptos Are Us. Tom Lee just confirmed Raoul Pal's thesis. And I've shared this so many times on my channel. It's just nice to see that other analysts, and this is a mainstream guy. He's a contributor on CNBC. He's talking there on national television. You can see on the screen right here. He believes the same thing effectively that Raoul Pal and Julian Biddle believe. And they're the ones that started screaming like a year ago. Guys, actually, it looks like this cycle's gonna go into 2026. They were saying that a year ago. And they weren't just arbitrarily selecting that time frame. It has to do with debt refinancing and how that impacts how global liquidity flows. throughout markets the world over, frankly. But look what Cryptos R Us wrote here about this video clip with Tom Lee. And he's one of the founders of Fundstrat. Tom Lee just confirmed Raoul Pal's thesis. On CNBC, Tom Lee said Bitcoin is highly sensitive to the ISM, and when ISM moves back above 50, expansion, it's historically lined up with supercycle moves in Bitcoin and Ethereum. He even noted detrended Bitcoin is almost perfectly correlated with the ISM. Same message as Raoul Pal. This isn't about the old 4-year halving cycle. It's about the business cycle and monetary policy turning higher. Spot on. And he says different voices, same macro signal. Exactly. They independently came to the same damn conclusion. Are they wrong? Maybe, but I doubt it. Outside of a black swan event, I'll be very surprised if liquidity is going up and then a lot of that money doesn't flow into risk on assets like it always does. Like, just think through your own mind. Liquidity increases, which means people, businesses, institutions all have way more money than they did prior. And they do what with it? They have it. What are they doing with it? You don't think that there's an increased likelihood when there's more money sloshing around that a certain percentage of it ends up in risk on assets like stocks and crypto, small cap stocks specifically, and cryptos like XRP? Like, you don't think that? Okay, what's your macro thesis then? Why doesn't that happen anymore? Why has that human behavior changed if that's what you believe? See, I don't think human behavior is changing at all. I think this is exactly what we're likely to see. Here's a post from chart analyst Seth Golden. And he said, if you can't get bullish about the markets and transports at a 52-week high and nothing left for it to do but achieve all-time highs, investing might not be for you. I like this post. And so what Seth Golden is highlighting here is actually a major macro signal. The Dow Jones Transportation Index just hit a fresh 52-week high, and historically, when transports break out like this, it's a sign of real economic strength underneath the surface. Of course, it's happening at the same time the Russell 2000 is hitting new all-time highs day after day, so love to see that. Interesting confluence there, right? But transports are literally the arteries of the economy. Trucking, shipping, rail, air freight. They tend to move first, actually, because they respond directly to demand. That's why it makes sense to watch this metric. And when they're surging, it usually means businesses are ordering more. Consumers are spending more. The broader market is gearing up for expansion, not contraction. Duh. It's more confluence here. That's why this matters for risk on assets. Breakouts in transport, they often precede broad equity rallies for obvious reasons, right? And crypto tends to follow those liquidity flows with even more upside. So this is the exact opposite of a bearish macro backdrop. It's the exact opposite. The bears, how do they not get it? How do they not get it? Well, I know why in some cases. In some cases, they're not even considering macro. The bearish ones, they're looking at various metrics that look like, the last bear market, the interest of the last bear market, and they're ignoring everything else. What about all the metrics in charting that don't look bearish? What about all of the macro factors? Why don't you look at that? Why are you leaning so heavily into like a couple bearish metrics when like little things can vary from cycle to cycle, but the backbone of all of this, which is liquidity, that's still the driver here. That hasn't changed. This time is not different. So, strength like this typically confirms that liquidity is improving. That's why this matters. That's why I'm taking a moment to highlight this. And we already know financial conditions are loosening, as I mentioned earlier in this video. These are clear signs that investor appetite for risk on assets is returning. It's very obvious. When transports are pushing toward all-time highs, it's historically been an excellent time for Bitcoin, altcoins in general, and yes, XRP absolutely. And you've got the Russell 2000 again just blasting off here. Here's a post from chart analyst Credible Crypto, and this is just from this afternoon. And of course, like I already told you, Bitcoin dropped into the upper 80,000s. People are freaking out over that. That's hilarious to me. As somebody that's been here, I was here when Bitcoin was $3,200, so that just makes me laugh. I got the lulz here. It's very cute. Anyway, so he wrote, got a quick second to take a look at some charts. Market looks good overall, in my opinion. I think Bitcoin looks good for at least one more leg up to $100,000 plus, as long as it holds above the lows at $83,900. Okay, that freaked people out because people didn't realize he was talking about lower time frame price action, meaning short term, not big picture. And so he shared this screen grab of people flipping out over what he said here. I'm not going to read all of them, but they're on your screen. And he wrote, folks, LOL, nothing has changed on higher time frame, meaning big picture. As long as $74,000 holds, which I expect it to, $126,000 plus, also known as new all-time high, is still my primary expectation. The comment about one more leg to $100,000 plus was a reference to the idea that it's too early to tell if the move up to $100,000 plus would be part of a fresh impulsive move to new highs or just part of the corrective consolidation we have been in for months now with further chop to follow. Chill, fam. will always be bullish AF above $74,000, irrespective of lower time frame price action, period. So yeah, he's not changing into Credibear. He's credible, okay? And then we had this from Crypto Wizard, ETH BTC chart. He said, watch out, bears. Remember what happened the last time ETH BTC exploded? ETH against Bitcoin is gearing up for an explosive rally. If successful, Ethereum will follow suit. Patience pays. Okay, now that matters because historically when this blows is really good for altcoins, including XRP. And he is one of a bazillion analysts that I follow that are all highlighting that ETH is primed, including on-chain analytics firms. I don't want to flood you with a ton of posts about Ethereum in this video, but I'm just letting you know I consistently see this. I just chose one example, but there are tons of them. So hopefully they're right. If that is indeed the case, you know it's good for XRP, which is what I care about most. XRP is my largest individual crypto holding. That's primarily what I'm here for. I'm biased. It's what my greatest interest is in crypto, for obvious reasons. And I'm sure many of you feel the same way, or maybe even similarly situated. But yeah. So here's a post from Chart Analyst Crypto's XRP. Says this level marked the bottom back in June. Huge moment for XRP. And so you can see he's talking around close to the the $2 level. And as we hit that, which had people freaking out, what happened after that? XRP rocketed up to a new all-time high of $3.65 very quickly. Look at that ramp up. And so he's saying, hey, it looks like, he's hinting at anyway. It's like, hey, it's respecting that support level. Market's fine bottom. So what do you think is going to happen if this market's heating up now? Maybe these institutions buying heavily for the first time above $2 with all these ETFs. That's a lot more than what many of us who have been here for years have paid. My average buy-in for XRP is 25 cents. That's my average, having dollar cost averaged in for years. I paid 25 cents on average for all of my XRP. The cheapest I ever bought it was 15 cents. So now these institutions are paying $2, and you can be like, "Wow, that's pretty high." They're here, and that's my point though. That's their starting point. And maybe we look back on this and we're like, "Wow, those institutions actually kind of got in cheap." We may very well see that when we reflect back on this. We just got to see what happens. But I'm optimistic for the future. Obviously, I'm a mega XRP bull. Here's a post from Chartner, and he said, "If XRP fills in the October wick, you may not get another chance before the next meteoric rise. Opportunity is presenting itself once again." And he posted that just this morning, even as the market was falling earlier today. It's up a bit now, obviously. But the optimism is still there. And here's another one from him, actually. It says, XRP, could you handle this journey to $27? So he's still, even in this phase where it's still popular to be bearish, he's insisting, and he has been insisting throughout all of this, no, XRP is going to peak potentially upwards of $27. He's not wavered on this whatsoever. I don't make price predictions myself, but I do not think anybody making double-digit price predictions this cycle is crazy. I think that's perfectly reasonable to speculate about. Here's a post this morning from CW. XRP liquidated its high leverage short position and then also liquidated its long position. Yeah, well, that's kind of funny because XRP is basically just moving sideways. Everyone's getting chopped up. Stop playing with fire. You do not need leverage. If you're a regular person like me, you do not need leverage. You just don't. You don't need to pepper things up here. In an asset class where if you just hold, you can get, multi-thousand percentage point gains just by holding and doing nothing. You need to spice that up, you actual dipshit. What is wrong with you? It doesn't make any damn sense. But people gonna people, man. People always gonna people. Here's a post from Dark Defender. The bears tried hard to break $1.98, but XRP defended it so well. Next primary resistance, $2.09, and then $2.22. NFA, of course, standing for not financial advice. So he still thinks that we're on track to move higher. And his upper predictions haven't changed. He's predicted for this market cycle over $18 XRP. It's just expanded because of the nature of how liquidity is flowing through the entire economic system on a global scale. I buy into the thesis. That is why, because that is the Raoul Pal thesis is the best macro thesis that I have ever come across. And if you have a better one, bring it to me. I absolutely will consider it with an open mind. Because I just want to believe whatever's true. But I haven't seen one. And now we have additional analysts in traditional finance jumping on board, lining up with them, like that Goldman Sachs guy that was on Fox Business. You got Tom Lee from CNBC. He fully seems to believe the same thing as Raoul Pal, or it's strikingly similar at a minimum. Like they're all jumping on board on that. There isn't some sort of popular other narrative amongst these guys that have good track records. It just seems like people are coming around to what I think is likely the right conclusion. And of course, if I'm wrong, I will eat my words. I don't know for sure what's going to happen. All I can do is tell you what I actually believe. And if it's wrong, it's wrong. But this is what I really think is probable. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.